Hello and welcome to the John B. Levy & Company podcast. I'm your host, Rick Young. Well, we're closing out the first quarter, and John, we're talking about mastering the recipe. What do you mean by that?
Well, I think that what we're seeing is that lenders are starting to figure out what it takes to make new loans. And that's particularly true in the CMBS 2 arena. 6 months ago, there really was no CMBS 2. Now lenders are trying to figure out how they can make new loans, what sort of leverage levels, what sort of price, and how they sell them into the secondary market. So they're in a way, they're kind of groping their way through the dark, trying to figure out exactly what sells and how to excite this new and growing market.
Are the Fed still heavily involved in helping out private enterprise?
No, they seem to be backing off, and one of the perfect examples of that is the Term Asset Lending Facility at TALF. That was supposed to be for commercial real estate and others, really their savior. And interestingly, it's had some effect, but not a lot of effect. Only one of the 3 CMBS deals done last year, just one, was the TALF deal. The other 2 were not done with TALF, and TALF expires at the end of this month, at the end of March. And what's interesting about that is the Fed's backing away from that, and nobody seems to care. So they're actually pulling away nicely, and they're also pulling away in the single-family market. So, yeah, they're backing away from the market.
We're seeing a lot of mezzanine debt, John. Is this a good time to access that debt?
Much better. Mezzanine debt's been fairly expensive. 6 months ago, mezz debt or preferred equity was in the 15 to 20% range. That market's just collapsed. You can access mezz debt somewhere in the 10 to 12 to 13% range. Get additional leverage. And many borrowers today need that leverage. They either need more equity, which we're now able to raise, or they need mezz debt because they've got borrowings that can't be replaced by just a simple new first mortgage.
Will we see smaller regional banks go out of business?
Absolutely, yeah. The community banks are continuing, I guess, to be pruned. There are probably 5,000 community banks which are less than 10 billion, which is a good-sized bank, but over 100 million. And I would think if I were running a community bank or a smaller regional bank that was in the bottom 5 or 10% of their competitive set, I'd be really nervous.
Now the Dow is up. Now, is this surge helping other markets?
Yeah, it is. I think people tend to look at the Dow and they feel good, or they feel bad, as the case may be. And at 10,006 versus just a year ago, we were at approximately 6,500, which was, everybody felt terrible. They almost wanted to jump off the proverbial bridge. The banking system was on the verge of collapse. None of that's the case today. The banking system's starting to be profitable again. People have been repaying their TARP money. So, I think people look at the number, they feel good, they have some confidence, and confidence expresses itself in willingness to make new loans.
So the loan markets are picking up?
Yeah, loan markets are definitely up. We can't really compare them to 6 months ago. Certainly a year ago they were non-existent. 6 months ago you could see the beginnings. 3 months ago you could see the interest. And now people are really entertaining new investments, whether they be loans, whether they be preferred equities, whether they be mezzanine debt. And they're on all property types. There was a thought not too long ago, right before the Christmas season, that retail was dead. I mean, nobody was going to shop for anything anymore. We're finding actually a reasonably active market for shopping centers, for loans, for equities on shopping centers. I think 6 months ago people would have said there's no way, there's just no interest in retail. Clearly not the case. Things are better. But from a speed point of view, Rick, what I'd like to say is we're not running like a thoroughbred. We're running much closer to the tortoise. The difference is 6 months ago we weren't running at all. So we're on the upswing, but we're certainly not we're certainly not running flat out.
All right, thanks a lot, John.
A pleasure.
Next time, John B. Levy & Company partner Andy Little gives us his take on the late spring market. For more information, give us a call at 804-644-2000.